To keep you updated on the capital and financial markets, here is a recap of what happened.
New rules limiting how freely asset managers can attach the environmental, social, and governance label to funds sold in Europe promise to trigger a widespread purge across the industry, according to a fresh analysis by Morningstar Sustainalytics. Roughly 4,300 funds domiciled in the European Union that currently claim to pursue ESG goals, or that carry similar sustainability-related labels, are potentially affected by new guidelines unveiled in May by the European Securities and Markets Authority, Morningstar Sustainalytics said on the 5th of June. While it's impossible to predict the full impact of these guidelines, we expect their implications to be significant, Hortense Bioe, head of sustainable investing research at Morningstar Sustainalytics, said in an emailed statement. They have the potential to completely reshape the ESG fund landscape in Europe. India's mutual fund assets surged to 58.6 trillion rupees in May, just shy of the 60 trillion rupee milestone, marking the fastest growth on record. This leap is enormous. India's mutual fund industry added 9 trillion rupees in less than 6 months, a feat that previously took 5 decades to achieve its first 10 trillion rupees since 1964. Inflows into equity mutual funds hit a whopping 346.97 billion rupees in May, 83% higher than the previous month, driven primarily by small and mid-cap funds. Investors' enthusiasm for these categories helped equity mutual fund inflows reach their highest point since April 2019. Domestic equity mutual funds have seen net inflows every month since February 2021, totaling 5.58 trillion rupees, even surpassing net foreign inflows during the same period. This continuous flow of investments has significantly boosted the NSE Nifty 50 index by about 55% over the last 39 months. A new report by the Investment Management Association of Singapore showed fund houses in the city-state maintain a high standard of risk and performance assessment. 38% of the companies currently have a designated CRO to oversee risk this year, much higher than the levels seen during the 2 previous surveys in 2021 and 2018, its Survey of Risk and Performance Practices 2024 showed. Meanwhile, companies primarily task either their CEO, CIO, or COO to handle performance monitoring. In environmental risk management, more than a third said they have a designated CSO or head of ESG or sustainability. The Securities Commission Malaysia wishes to announce that Dato Sri Dr. Awang Adek Husin will retire as the SC chairman, with effect from the 15th of June 2024. He will be succeeded by Dato Mohamed Fariz Azmi, former executive chairman of PwC Malaysia, who will assume the role on the 16th of June 2024. Dato Mohamed Fariz is currently an SC board member since the 15th of August 2023. Dato Sri Dr. Awang Adek would like to thank the government, including the Ministry of Finance, the capital market industry and various stakeholders for all the support during this tenure. Environmental, social, and governance investing was never going to be a panacea for climate change ills, and the growing reaction against it now highlights the risks of poorly thought-out measures. It also means that time may have been wasted in the quest for financial solutions in the climate fight. A net $40 billion has been withdrawn from ESG equity funds thus far in 2024, the Financial Times reported on the 6th of June, citing research from Barclays. According to the report, this is the first year that the flows have tended negative since ESG investing was launched 20 years ago, with investors turning their backs on sustainably focused stock funds as poor performance, scandals, and attacks by right-wing US politicians hit a sector that has pulled in trillions of dollars of assets. One drawback is that ESG investing requires investors to focus their attention across a spectrum of issues ranging from corporate governance to somewhat nebulously defined social questions and even more diverse environmental issues. Another major problem is that compliance has spawned a whole new monitoring industry, especially on emissions, which has led to some confusion and conflict on the standards, as well as higher costs. The Federation of Investment Managers Malaysia is pleased to announce the release of its Annual Report 2023, themed in recognition of its 30 years of progress. Link in the description. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.